PNKSTR, the first liquidity-weighted, ecosystem-wide deflation engine in crypto. Why audited on-chain burn, NFT vault mechanics, and high-volume strategy launches create one of the most asymmetric supply compression systems ever designed. Executive Summary, TLDR for investors. PNKSTR is not a meme token. It is the deflationary settlement layer for the entire TokenStrategy ecosystem. Using only audited live strategy data, PNKSTR is currently burning $9,000 per day. Approximately 187,000 PNKSTR per day. Approximately 68.3 million PNKSTR per year. Approximately 6.8% of total token supply per year, and that is before official Punks integration, Beeple-linked strategy launches, Larva Labs participation, Vault NFT reflexive burn events, PAINSTR dual-reflexive market shocks. PNKSTR operates on a two-layer deflation model. Base state burn, always on. Catalyst burn, cycle accelerant. This dual structure is what produces nonlinear supply compression and violent price expansion during bull cycles. 1. What PNKSTR actually is. PNKSTR is the ecosystem token for TokenStrategy. Every strategy deployed on the platform routes 1% of all trading volume, plus all deploy fees, plus 100% of Vault NFT ETH sales, directly into buying and permanently burning PNKSTR on the open market. There are no emissions, no inflation, no passive treasury dumping, only market-native forced demand combined with irreversible supply destruction. 2. Audited base state burn, verified, not projected. After auditing the live strategies by direct screenshots and extracting only real trading volume, the ecosystem currently processes approximately $898,000 plus per day in real volume. 1% routed directly to PNKSTR burn. Base state burn, current reality. $8,987 per day burned into PNKSTR at approximately 0.048 PNKSTR, approximately 187,000 PNKSTR burned per day, approximately 68.3 million PNKSTR burned per year, approximately 6.8% annual supply destruction. This is the always-on gravitational deflation field. Even if no new strategies ever launch again, PNKSTR compresses supply every single day. This is not narrative. This is already happening. 3. Why the 87 dead strategies don't matter, and why that's bullish. Out of roughly 150 total strategies, about 87 currently show zero volume. They only contributed one-time deploy fee burns, future optionality if volume ever activates. They do not contribute to ongoing 1% volume burn today. This reveals a critical structural truth. Strategy count does not drive burn. Liquidity concentration drives burn. The ecosystem follows a power law distribution. A handful of high-volume engines dominate total deflation. This structure is exactly what creates explosive convexity instead of linear growth. A small number of high-liquidity strategies determine the destiny of total supply. 4. The catalyst layer, where reflexivity becomes violent. The next phase of the system comes from high credibility, high volume strategy launches, including Beeple, Larva Labs, official Punks integrations, These do not behave like low-volume recursive experiments. Each major launch can add 200,000 to 1 million plus dollars per day in trading volume, which translates to $2,000 to $10,000 per day in additional PNKSTR buy and burn, 40,000 to 200,000 PNKSTR burned per day, 15 to 73 plus million PNKSTR burned per year per major launch. Just 2 to 3 major launches can double the entire ecosystem burn rate. This is the precise transition point where linear supply math fails and reflexivity takes over. 5. Vault NFTs, turning NFT floors into token annihilation. Vault NFTs introduce a mechanism no other crypto primitive currently offers. 100% of ETH generated from Vault NFT sales is used to buy and permanently burn PNKSTR. This creates a direct bridge between NFT price discovery and token supply destruction. If punks move to 75 to 100 ETH floors, and vault cycles execute 10 to 20 punks, then at $4,000 ETH, $3 million to $8 million forced PNKSTR buys. $10,000 worth of ETH, $7.5 million to $20 million, plus forced PNKSTR buys. That is instant, vertical, one-way demand with zero sell-side offset. Vaults turn NFT upside directly into token annihilation. 6. PAINSTR, the dual-reflexive flywheel. PAINSTR introduces simultaneous deflation on 2 layers, token burn via volume, NFT supply compression via burns. As PAINSTR volume spikes, PNKSTR burns accelerate. NFT circulating supply contracts. Prices rise on both sides. More capital chases the system. Burn accelerates again. This produces multi-day reflexive loops, not single-candle events. PAINSTR does not compete with PNKSTR. It weaponizes PNKSTR's deflation engine. 7. Scenario modeling, audited plus catalyst structure. These are supply math outcomes, not hype targets. Conservative scenario. Only base state burn persists, approximately 6.8% supply destroyed per year. 24 months, approximately 13 to 15% supply removed. Price band is $0.40 to $0.90. Moderate scenario. Base burn plus approximately 2 major catalyst launches plus light vault activity. Approximately 20 to 35% supply removed over 24 to 30 months. Price band $1.20 to $2.50. Aggressive scenario. Base burn plus 4 to 6 major launches plus multiple vault cycles plus PAINSTR reflexivity. Approximately 40 to 70% supply removed over a full cycle. Price band $3 to $7 plus. Again, these are mechanical outcomes of supply compression, not optimistic chart sketches. 8. ETH sensitivity. Why ETH multiplies everything. Because all burns are funded in ETH price vault burn impact. $4,000, strong. $6,000, very strong. $10,000, exponential. As ETH rises, the same NFT sale destroys exponentially more PNKSTR. PNKSTR is therefore implicitly levered to ETH without holding ETH price risk. 9. Why this model is structurally unique in crypto. PNKSTR combines liquidity-weighted deflation, NFT native forced buy and burn, vault-driven shock events, dual-reflexive token plus NFT burn, zero emissions, no passive treasury sell pressure. This is not DeFi yield. This is capital native supply destruction. Final conclusion. PNKSTR is currently priced like a speculative NFT ecosystem token, but it is already functioning as a mathematically verified deflation engine, destroying approximately 6.8% of its supply every year. With its largest catalyst not yet fully activated, once official punks, Beeple, Larva Labs, vault cycles, PAINSTR reflexive events become fully live, the system leaves linear finance and enters reflexive compression. This is how real digital scarcity is manufactured.